What's up, everybody? This is Misael Gonzalez. You're watching Wall Street Saturday, a show about God, investing, and stocks. Our show is for educational purposes only. We're not financial advisors. So go ahead and enjoy the show. Share it, like, subscribe, and hit the notification bell to be notified every time a new video comes out. Thank you.
Hey, what's up, everybody? Thanks for joining us for another Wall Street Saturday episode, another short here. It is February 19, 2022. We got some exciting things going on in the world right now, and some things that we had seen that we think we might be able to take advantage of. I just want to introduce myself. My name is Josh Flores.
I'm Joshua Trusty.
And I am Misael Gonzalez. So basically this week we saw technology claim its second victim in terms of sharp decrease in its market cap after Meta dropped 25%. This time around it was Roku. And we've been chatting before in this team as it's kind of curious how we have seen these kind of drops in companies that did really well during the pandemic. And they're not even cooking their books or anything like that. But I think the pressure downwards has been strong enough to bring these companies more than 20% below their trading range for just reasons that are signaling that those companies that did well in the pandemic may not be doing well anymore. So I wanted to share an article from Yahoo News, and this one kind of shares, shares the same thought that some pandemic favorites have seen big losses during the past few weeks, with Roku being the last one. As the shares tumbled Friday, we can see here that as much as 27%, which is their biggest one-day drop on record, according to Yahoo Finance. Some of the other companies that have seen this kind of activity have included Netflix, which also saw a decrease in its subscribers, dropping 20+% in a week. And in addition to that, we've seen the article also mentions Roblox, which is something that we've talked before, and Shopify, which have seen a 60% drop from their peaks. So we wanted to bring this out because as we continue to monitor the market, as we see like a shift towards more opening trades, people going out and about, given that the pandemic seems to be at least falling out of people's perspective, these companies, there's going to be more companies in the future that continue to struggle. We saw that I think the biggest one of these was Peloton, 80% off of its peak in January 2021. Obviously, that they did have some issues. The latest headline being that they had so much demand at one point that they were shipping bikes that they knew had rust on them. So we are going to keep an eye out for these kind of trades. We have to be very careful, especially now that we have a lot of things going on, including the Russia-Ukraine conflict, pressure from the Fed that may claim more victims in the coming weeks in terms of really high-performing tech stocks in the past few years. And with that, I will let you guys chime in.
Yeah, I was going to be real quick to kind of just say that, despite like all these things going down, if there's people that actually hold this, so I can tell you, I'm actually a holder of Roblox, and yeah, I've seen that take some big hits, and that's like a really hard one to see. But I obviously believe that there is like rise for concern there, but I also just want to state that taking a loss, yeah, of course, I think the goal of investing in the stock market is to have your money go long and to grow. But you actually get like 100% of your investment back if you really do take a loss, in the sense of like a tax return point of view. We're allowed to take up to $3,000 in capital losses per year. And so that's just one thing to think about, as people shouldn't feel too bad about taking some of those losses when they can definitely write them off on their taxes. I mean, that's kind of the biggest thing that I kind of think about when it comes to some of the losers that I have, and that's why people rotate into other types. That's all I kind of wanted to say.
Yeah, so for me, going back to Roku, one thing I did want to mention was just that if you look, for example, at the market cap, it can tell like a slightly different story from, for example, just like the stock price. But in this case, it tells the exact same story. So if we take a look at where Roku is now, the overall market cap is about $15.11 billion, which is roughly where it was just before the pandemic. So this is like February 20th of 2020, and its market cap was just around like 14.89 billion. So looking at the market cap is a really good way to figure out if this was strictly a pandemic play, mainly because in this time period from say 2020 through the present, what could happen is that that particular stock could have issued more shares. So if they're issuing more shares and they're diluting their shareholders, then that could also explain why things have gone down in the meantime. So if you're, for example, if your stock has gone down substantially since you had purchased it, since the pandemic, but it's also issued more shares, then maybe that correction is based off the market cap and not necessarily based off of that particular stock price. So in that case, you also want to take a look at the market cap as well, because if you're, for example, if your market cap is still higher than what it was before the pandemic, then that's not necessarily an indicator that it was a bad play. It's just that maybe there wasn't as much, there was a little bit of speculation, but it wasn't all speculation. But in the case of Roku, it looks like there was quite a bit of speculation because almost all of this mountain has been entirely erased. And we're looking at the market cap, so that's the real value of the company. So now the market is valuing this company in the exact same way as it was pre-pandemic. So that is definitely a cause for concern for Roku. But if you're looking at some of your other holdings that were favored during the pandemic, you might want to take a look at the market cap chart just to make sure that you're not being overly critical of your position. So that way you don't just quickly sell when in actuality, that particular company has done better and it wasn't all speculation. So in that sense, you can use the market cap chart as a way to encourage you to stay long and stay green.
Hey guys, thanks for checking out the video this week. If you haven't already, please like the video and subscribe to the channel. Every week we're going to be uploading a couple of videos every Saturday of opportunities that you can take advantage of in the markets. Thanks again and have a happy trading week.